How are you? Good. Because others are coming a little bit later, I'm going to give you something fun to do that they don't get to do. Okay? Ready? Just putting up the slides. Okay, so
hi everybody, this is Betty Wilkinson. She is the CEO at Financial Sector Deepening Zambia. She will be heading today's session. And so, yeah, I'll leave it up to her. I hope everybody's doing fine. I know more people are still coming, as I've seen on the group. So they'll come and join us as they come, so that we don't disrespect those who came in good time. So yeah. Betty, over to you.
So I'm not going to run through the whole slide thing. I'm just going to do one slide and tell you a story so that you can get the benefit of it, and those who came too late, they don't get to hear it. Okay? So this is a story of my family. That's my dad. And I'm the oldest of 4 children. And when I was about 7 years old, my dad went blind. And you can only imagine, here's this man who's a successful banker, and he has this family he has to support, and that's the 50s and 60s, so you're thinking that your wife stays home and you support the family. So when he went blind, he had to make a decision with my mom. And the decision was, do I become like a cripple, like a disabled person and try to get support, or do I try to work? And he said, just because I'm blind doesn't mean my brain doesn't work. So I'm going to have all of the children plus a reader plus my wife read to me. I'll come home at night with all the papers, and then they'll read to me, and I'll try to remember everything. So I learned how to be a financial person from reading financial information to my dad, who was a banker, from the time I was 8 years old. And so when I went to university, it was like, oh, I know this stuff, right? So it was a little easier. So that's by way of saying that when you are learning, you never know what's going to happen tomorrow. You never know what the circumstance of you, your family, your circumstances are going to be. So take the opportunity to learn whenever you can, and you'll be surprised the places you'll learn, the ways you'll learn, and then what you get out of it. Okay? So the second piece about my dad is that he was sort of a smart guy, and he kept an eye out for what the innovations were, just like all of you do. And so what happened was that he came home one night when we were at the dinner table, and we always talked at the dinner table, right? He came home and tell us his stories. And he said, I've seen something today that I think is going to change the face of finance forever. And we're looking at him, this is 1963. And we all look at him and say, so what was it called? And he said, it was called an automated teller machine. The ATM was actually created in 1962. That's when the first ones came out. Now you don't even think about it. You just go there, you put your card in, you find out what you need to do, you make payments, you take cash. But at that time, it was a miracle. It was something we couldn't even imagine was happening. And so that's the feeling that we all have now about digital finance, digitization of services, and what you guys are doing right now. You are at the edge of an amazing revolution, something that will change our whole planet forever. So enjoy that time and enjoy being a part of it. You're creating the future right here sitting in the chair. So the third thing I want to tell you is that my dad also looked at what was happening in the market, not only on innovation, but he also said, so who's not getting services, who needs them? And in the United States in the 1960s and 70s, there was a whole set of small businesses that could not get services from banks. They couldn't get credit, they couldn't get proper savings accounts or checking accounts, they just couldn't engage. Now, my dad and his friends said, this group is called the missing middle. That means we're not providing them the services they need, and so they can't grow. Many of you are also the missing middle. You go to the bank, they hand you a 20-page form in legalese English. They say, where's your house or where's your land to secure this, to start your business? Can't do it, can you? Can you? Yeah. So what he did was started to look at how his bank could serve that group. And he actually spent most of his time with women-owned businesses. This is pretty early in the day. I mean, now we're just talking about that again, but at that time he was thinking about it, and he trained his daughters well. Well, there were 2 daughters and 2 sons. So he trained his daughters well to think about that as a crucial issue for every country. So now in FSTZ, we pay very close attention to what you're doing in digital finance, and we're going to talk about that today and give you some ideas. We pay very close attention to who can get services in the formal financial market and who can't, and at what cost. And there's someone in the room who's actually working on a comparison system for when you borrow, how much will it cost you, what are the fees, like that. Imagine, you can actually look and figure out who's going to give you the best deal online. So stand up and take a bow. So there are these kinds of things that all of you are thinking about. You're thinking about, how do we identify the right client? How do we identify the services that the client needs? And how can I put this in a way that is very usable by most people? Even if I'm in a rural area and I just have a text phone, can I still use your service? Yeah, so internet is a dream in the rural areas, but cell phones are not. And one of the great things that happened in November, December this year is that the government committed to putting in over 1,000 new cell phone towers across the country. And I will tell you that they used our data that we had done geospatial mapping in 2015 and then updated in 2017 to show where are people, where are services, where do you need to have connection. And then they used this data and actually decided on the placement. So government was very responsive to the clear need for cell phone services across the country. Within 2 years, there will be 100% coverage for most of the people in the country. And we're working separately with ZICTA on improving the quality of that coverage. So be ready. In 2 years' time, pretty much everybody will be ready for you. So then will you be ready for that? Well, that's my introduction. Do you have any questions before we sit down and just give 5 minutes for the Ministry of Finance to come? Every one of you has a story just like mine. Someone who inspired you, something that happened that you decided you're going to do this, someone who's behind you and giving you support, a wife, a husband, a friend, a parent, a child. So use that, use the inspiration that can be to you. You can be successful, I promise. Okay, we're going to stop and wait for this guy now, or should I just go ahead? Have I got you hooked yet? Okay, I'll ask you a question. Can I please ask everyone in the room who has insurance to stand up? Anyone who has insurance, stand up. Okay, so look around the room. There are 3, there are 4, there are 5. This is pretty impressive. There's 6. There are 6 people who have insurance. How many, okay, please sit down if you have insurance through your company. If your company supplies your insurance and you didn't buy it yourself, sit down. That's fantastic. There are 4 people in this room who have insurance. Now, I have to tell you, in Zambia, 2.5% of the total population. That would mean 1 person in this room. Please sit down. Now, this is an exercise program. So please, if you have a pension, whether it's NAPSA or it's a private pension arrangement or micro pension, please stand up. Wow, a lot of you are employed. Otherwise it wouldn't be NAPSA. Please sit down if it's just NAPSA. Who has a private one? Sit down if it's only NAPSA. Good, good, good. So there's 3 of you. That's really impressive. In Zambia, less than 0.1% of the population has a pension. Please sit down. So one of the things that we're interested in is to see how do we expand the range of financial services in Zambia. So you see, you have a number of people who have access to pension through NAPSA, not so many on their private pensions. Then you have 6 people in this room who have access to insurance. In the United States, if we ask that same question, 80% of the population would stand up. And it wouldn't be just the vehicle insurance. It would be a wide range of insurances. I have insurance for the things in my house. I have insurance for my health. I have insurance for my car. I have insurance in case I die. right? My funeral insurance. So I have all of those now. But to find out about them and to understand them, took a little time, right? So one of you might be the person who introduces the rest of Zambia to what insurance really is and how it can be understood and used. There are companies now that we're working with who are setting up insurance that will cost 2 kwacha. And be useful. There are companies that we're working with right now who are creating insurance so that when you get on a bus, if you get sick or if your things are stolen, you have insurance for that loss. And they're developing it now. And it's one of the big insurance companies. There's discussion with PIA about whether or not we can work on micro pensions because everyone's having lots of kids and expecting the kids to support them. All of you, I'm sure you get messages from the village at school time. Can you please send some money? Yeah, that would be me too. I get them too. And so helping people plan for that, helping people save for that, helping people get the money there rather than having to walk 30 kilometers to the bank and then bring back a receipt like that. It becomes a little crazy, huh? Okay, it's okay. Okay, now I'm going to ask another stand-up, sit down. How many of you have a savings account in a bank? Please stand up. So this is the majority. That's a good sign. Less women. That's unfortunate. It's talking. Please sit down. How many of you think that you're actually making money on the savings account? Please raise your hand. Are you saving and making money on the savings account? Raise your hand. 1.
Not enough though.
Not enough. 2, 3. You're making money on your savings account. Have you looked at them recently? We did a study with the Bank of Zambia last year. And we looked at all of the banks and said, if you deposit 100 kwacha a month and you don't even check the balance, at the end of the year you will have only 60 to 70% of what you actually saved. So that's a challenge, isn't it? So I'm just doing some warm-up stuff and then you can go on about NFIS, right? So this is something to be thinking about. How do we improve the system? How do we help people choose so that they make money rather than losing it? Okay? I'll talk some more later. We have the Ministry of Finance here now to talk to you about the NFIS. Do you have a slide? Do you have slides or are you just going to talk?
I have a PowerPoint.
Yes, sorry?
I have a PowerPoint.
You have a PowerPoint? Okay, they're setting it up?
Yeah.
Okay.
Whenever they're ready.
Okay.
It's coming.
He's coming, huh? Okay, the last thing is about loans. How many of you have a loan from a bank? Please stand up. Same faces. Okay, so these two, you want to talk to them after the end, okay? Because they've obviously figured out how to game the system and make it work for them, okay? So the rest of you who didn't stand up, you talk to these two, okay? Thank you, sit down. And what you'll see is that this mirrors the experience we have of the data in Zambia. That Zambians are actually better savers than they are borrowers now. And that Zambia, compared to the neighborhood, we save a lot more in Zambia than the Kenyans do, than the Tanzanians do, than the Ugandans do, than the South Africans do. On a per person basis, we save a lot more. Do you know why? When you save your money, what do you save it for? Can you give me an example of what you save your money for? To get interest? Okay, why else? Why would you save?
For future use.
For future use? Yep. Future projects, start that business, buy the car. Yep. What else? So in the villages, when people save there, they save against that emergency. They save against, I have to have some money in case my child's sick and I have to take them to the clinic. They save in case the crop fails and we have to figure out how we're going to eat. They save for in case there's a funeral and so they have to contribute to a funeral. So I'm sure all of you also do this, and your savings is also going to people. So, you know, school fees time, you've got savings, it's going out to the village, or to your brother, or to your cousin, or to your auntie. And so when you think about saving, Zambians save more because they manage their risk that way. That's why less insurance, more saving. And in terms of borrowing, Zambians actually borrow less. And there are two reasons why that happens. The first reason is because there's a long history of people not paying. And in Zambia, there are two kinds of not paying, as in most places in the world. You don't pay because you can't. There's been an emergency, there's been a problem in the family, you've lost your income, you lost your job, your crop failed, so you can't pay. And we've never done well on how do we do that? How do we deal with can't pay? How do we help people through that? The other is won't pay. It's the government, we don't need to pay that loan. So that also happens. But increasingly with the data availability, if you don't pay, you're going to have a hard time borrowing ever again. In the United States, if you don't repay your loans, what happens is you get blacklisted for 7 years. That means for 7 years you can't borrow because everyone will check your credit rating. And if you haven't paid your loans, even if you paid late, it's very difficult to get credit. So that circumstances are developing here now. So now we have to work out within Zambia, how do we do lending better? How do we do it more responsibly? How do we work with the clients? So when there's a can't pay, what do? How do we refinance? These are really important things that we're learning. As a group, we're learning this. The banks are learning, the regulators are learning, and you're learning. Okay, now I'll stop. I'll give him the clicker too. Okay. You're welcome. So just warming him up. Okay?
Yeah, thank you for warming him up.
Yeah, okay, left and right, forward and back, okay?
Good, Lisa.
Okay.
It was printed from FSD, just give a short introduction,
Lisa?
short chat, but yeah, warm up, so to speak. So for you guys who came in late, you haven't missed
What's her
much,
name again?
actually.
Betty, right?
But right now we're going to get into an overview of, a presentation on the overview of the National Financial Inclusion Strategy by a director from the Ministry of Finance. His name is Mr. Akapelwa Imwiko. So right now I'll hand over to him. So he will go through the presentation, then at the end of the presentation we'll be allowed Q&A and a short discussion just for us to understand exactly what the strategy is all about or what its objectives are. So Mr. Hamwiko, you could give him a hand.
Thank you. Thank you. Good evening, everyone. And thanks, Betty, for the nice warm-up. It allowed me to arrive on time. I was hoping to be here by 18 hours, but that didn't work out. But as introduced, my name is Akapelwa Imwiko. I'm actually Assistant Director, Planning, Policy and Research at the Ministry of Finance. So, but beyond that, I was actively involved in the putting together the financial inclusion strategy, as well as the policy, the financial sector policy. So what I'll be presenting today, I'll try not to bore you too much, but I would like, can everyone see the presentation? Can you see it from there? Okay. I'll do a small introduction, give you some highlights on the financial sector development policy itself. Then I'll give you highlights on the financial inclusion strategy. Then we'll talk a little bit about some key targets that we have, as well as the framework that we're going to be operating under. And then, of course, finally touch a little bit on the coordination structure for the financial inclusion strategy. So we have the policy. The key here, and unfortunately I do apologize, I don't have the documents with me, but we have some at the office and online, yes. So this, I think for you guys, IT, I'm sure you can go online and get it. But I hope to come with some hard copies. We have two documents. One is the financial sector development policy, which is more overarching. Then we also have the financial inclusion strategy. And hopefully by the time I'm done with the presentation, you'll be able to appreciate the difference between the two documents and why we have them. So the policy and the document are outcomes of a very collaborative exercise that we did as the Ministry of Finance and the regulators that we have, Bank of Zambia, Securities and Exchange Commission, Pensions and Insurance Authority. All these are financial sector regulators, if you're aware. So as with regulators, with the Ministry of Finance, including other entities such as RUFFEP, which is a Rural Finance Program. CCPC is a Consumer Consumer, I always forget. Consumer Competition Protection Commission, ZICTA, everyone knows what ZICTA is all. So we work together collaboratively with the support of the World Bank. They have a program which is focused on supporting financial inclusion. We work together to come up with a financial inclusion strategy. And why did we develop the strategy? Well, first maybe just to go by the bullets, the two documents were launched just now in November 2017. And the two documents are an indication of government's renewed commitment to development of the financial sector. We developed these, if I just bring to your attention, that prior to these two documents, we had what we call the Financial Sector Development Plan or Program, which ran from 2004 to 2009, and then we had the Phase 2, which went from 2010 to 2015. These two programs were mainly spearheaded by Bank of Zambia, but again, collaboratively with other institutions. And the whole idea of the Financial Sector Development Plan or Program was to develop the financial sector. Why is it important to develop the financial sector? We look at the financial sector as an enabler for development. In other words, all the developmental challenges that we're facing, we looked at different things that are enablers. One of them is infrastructure. If you have a shortfall of infrastructure, you are literally choking the economy. In other words, to give you an example, if you're a business person and you have a bad road to take your products to the market, that bad road is affecting your ability to move back and forth to supply your commodities. So infrastructure is an example of an enabler to development. Another one is the financial sector as a whole. We call it financial intermediation, is transactions that are happening in the economy to support the economy. So basically all the transactions that between a business person and a client, between a student and the school, all those transactions, if those are choked, if those are not efficient, that process itself is affecting our ability to be efficient as an economy. Then you talk about issues of the cost of doing business is so high. All the stories that you hear about why Zambia cannot compete. So by boosting the financial sector, as Ministry of Finance, we looked at it as a way to facilitate the environment, to create a conducive environment for development. So then we can start talking about seeing efficiencies in the system, which hopefully would result into the other good positive benefits that we expect from development. So with the expiry of the Financial Sector Development Program, it was incumbent on government to come up with a new program. So that's how we embarked on putting together the financial sector development policy and strategy. The last bullet is just to highlight that we have other programs that are ongoing. We have the rural finance policy and strategy that was also being developed, and we have other programs that are supporting the financial sector and financial inclusion in general. So when we talk about the financial sector development policy, basically, just in a very simple terms, it provides a comprehensive framework that provides strategic guidance and oversight for the development of the financial sector in Zambia. So in other words, you need an overarching policy from the government standpoint that will give some policy guidance on how to go about developing the financial sector. For example, do we believe in casinos as a way to boost the financial sector, right? I think you'll find that in our policy, casinos are down at the bottom. They're not a priority. In fact, maybe we scorn on them. We charge them a lot of taxes to discourage people going there. But if you're opening up a banking institution, such as a bank, you find that we are supporting that. So the idea is we are creating a policy where the private sector can read and get a good understanding of what are government's priorities in the sector. As a private entity, as a private sector player, you can get the policy and quickly read the policy of government, and it will tell you what areas, what avenues, what opportunities are there for you. So it's to provide an overarching, comprehensive framework under which all the financial sector initiatives can take place. Specifically, I think this is coming right from the document. We want it to be a policy that provides, that supports stability, innovation, inclusivity, as well as wealth creation. And so, of course, it has to be sustainable. Just to repeat, to re-emphasize what I just mentioned, we want a policy, and that's how we've designed the policy. And I hope when you read the policy, you'll be able to appreciate that it is designed to provide stability by developing a competitive and resilient financial sector. We want it to be, we want to support innovation. So the policy also is strong on supporting innovation. We want it to be inclusive. So we are, just to put it in a simple way, the policy makes it very conducive for entering and participating in the financial sector. We don't want a policy that is restricting ability for someone to participate. So inclusivity is important, as well as partnerships. We also want it to be supporting partnerships in the provision of financial products and services in the financial sector. So you see, under inclusivity, we emphasized SMEs, medium, small, micro, small businesses, as well as the rural population. Again, this is from a lot of work that we did, where we did some gap analysis, as well as some other analysis to see where are the challenges, where are we with everything. And we discovered that we're doing a little bit better in the urban areas, but we're doing very poorly in terms of provision of financial services in the rural population. And in fact, the big outcry, small businesses having access to any financial services, predominantly loans, that was a problem. I don't know whether your straw survey that you just did now, whether that reflected the issues of financial inclusion as well and what we're talking about. So basically the policy was designed through some homework, and we tried to put it together in a way which addresses the challenges that the economy is facing. We continue with the highlights. What I have here is just to share with you the institutions again that are involved: Ministry of Finance, Ministry of Justice, Bank of Zambia, Securities and Exchange Commission, Pensions and Insurance Authority, the Competition and Consumer Protection Commission, the private sector, civil society organizations, obviously other line ministries. And all of them have a role to play. For example, Ministry of Finance, like I indicated, overall policy guidance, regulating and coordinating, monitoring and evaluating the implementation of the policy. Whereas Ministry of Justice is more on making sure that there's harmonized legislation and regulations to be put in place. You can't have a situation where you are talking good in policy, but the regulations are saying something else. So as we put together the policy, one of the exercises we're doing right now is to make sure that our regulations are also speaking to what we're trying to achieve. This goes beyond there's a lot of talk of mainly talking about financial management, but it also has to do with policies that are attractive to an investor, attractive to a business entity, attractive to a small business entity to come in. We're talking about credit reporting. One of the things that you find where banks would say, we're not lending to individuals because you're all high risk. Basically, this whole room is high risk. You know why they are saying you're high risk? Because they don't know who you are. They don't know they don't know how you pay, your paying habits. They don't know whether Joe here pays their bills on time, who's good, who's a low risk, who's a high risk. They don't know. So what they do, they just give you a blanket interest rate. Look, we'll give you a loan 30%. Now, I don't know from a business standpoint whether you can really borrow money at 30% interest rate and do some legal business and actually make a profit and still pay back 30%. Okay? So the moment you say access to finance, we identified, okay, interest rates are very high. Let's put in place policies that will help taking down the interest rate. So one of them we're doing right now, we have the credit reporting bill. You'll be hearing about it in the news very soon. It will be in Parliament. If it passes, we are now introducing that you can have credit reporting agencies who can now start doing a business around monitoring paying habits of individuals. So that before a bank considers your application for a loan, they work with the credit agency and just say, look, I've got Joe Banda here. They say they work here. They say they've got this money. can you give us a credit profile on this person? The credit profile will show you for the past 5 years or so, how you paid your school fees, the last loan you took. Basically, it brings out the credit profile. Then we hope with that, you can now have a differentiation of the market. High risk, low risk. And then with that, maybe the banks will not need to get a big collateral. Right now, you can want to borrow just 20,000 kwacha. But the banks will ask you to give them a title of your vehicle or a copy of your title deeds to a piece of land that is worth so much more. It's because they don't know who you are. With a credit profile, we're thinking, now they can say, okay, now we know who you are, and it looks like you pay your bills on time. We're willing to give you low credit, low interest rates, and don't worry about that big collateral. Just bring something small, it's fine. So those are the things that we're doing in terms of regulatory environment. Another one, just to show you about that, is we're introducing what we call the Zambia Credit Guarantee Scheme. The Credit Guarantee Scheme, the idea is to be able to guarantee small business loans. So when banks are willing to offer a loan to an individual, let's say they want to offer 21%, if it's registered with the Credit Guarantee Scheme, we want to be able to say we'll take up some of the risk so that the banks can offer the loan at a lower interest rate. So those are interventions to help with the participation of the economy in the financial sector. So anyway, without boring you too much on that, just to highlight again that you had different regulators all involved in regulating different aspects of the financial sector. The Consumer Protection Commission, obviously, working with the regulators, but more on the interest of consumers and also securing competition. Private sector, of course, they have their role to play. Other line ministries, of course, depending on what the issue is, they have a role to play. I wasn't told how much time I have. 30 minutes, so I've got time. Okay, good. Just continuing the story, there's an issue of resource mobilization. It will be important that we resource mobilize, and government and all stakeholders shall be able to mobilize resources for that. There will be need to, of course, do some M&E, which is monitoring and evaluation. This will be the policy calls for institution, what? By institution, okay? We want all institutions to monitor. The regulators, we expect every regulator to be able to monitor how they're progressing with implementing their financial sector development policy. In other words, it shouldn't be just the Ministry of Finance. Every institution should tell us on the items that pertain to you, how are you moving? Now we move to the more interesting one, which is the financial inclusion strategy. So what I've just presented was a policy, the broad overarching policy, which is giving the overarching policy guidance by government. So we called it the Financial Sector Development Policy. Now, if you think about it, if you step back, that's broader, more high level. With the strategy, we're now saying let's zoom in on one particular area of the financial sector that we think is very critical. What is that? That's the financial inclusion. We want more financial inclusion in the economy. What we did, we did, of course, some desk work, analyzed our situation. Betty was touching on a couple of points. We analyzed our situation. We did some study tours to see what is pertaining on the ground in other places such as East Africa. We saw even places in South America. And then we got desk work. What we found, for example, is our financial inclusion. Financial inclusion, as defined here, is simply having universal access to and usage of a broad range of quality and affordable financial services and products. So having access. So that's what we are talking about when we're saying financial inclusion. And what we discovered in our desk work and our consultations and such is Zambia, well, we have made strides, but we're still lagging behind. We're at about 59% financial inclusion, 59% of the population, adult population is 59%. It's a jump from our previous number, which was, I think, about 39. 39. Yeah, 39. So we have made good strides, but compared to our peers, we're still lagging behind. And because we have identified the financial sector as an enabler for growth, this lagging behind means even our growth is being stifled. So we said, okay, we need to do something to bring up our financial inclusion to a level where we think it's more acceptable. So the strategy is essentially a mechanism or a framework that we've put together in consultation with different stakeholders to see how we can move Zambia's financial inclusion from where we are at 59 to a higher number. I have a slide where we show some of the targets.
Is the target?
Yes, yes, that's our target. So some of the things that we found, which we're addressing in the strategy, for example, there's a very good data mapping map that FSD did.
The geospatial
The
map?
geospatial map, where it shows where, if you see on the map, you can see where there's activity happening in the financial sector in terms of inclusion. It's mainly along the line of rail. The rest of Zambia, you can see big white spaces, showing you that, again, if you want activity to happen in those rural areas, you need to get that financial sector, being very active there. So what do you do to get the financial sector in those areas? So basically the strategy, again, is about identifying challenges in the economy and seeing how the means and ways to addressing those issues. So it's a 5-year tool. It's supposed to be operationalized within 5 years. And hopefully at that time, we'll step back again, see how we've performed, and see if there's a need to develop another one. So the framework, I think this is just, again, touching on what I just mentioned. It provides a conceptual foundation for financial inclusion implementation. The framework is built on 3 key enablers that need to be put in place to achieve our set target. Building on the enablers, the framework also identified 4 drivers to realize the vision of the strategy. So we talked about a framework, we talked about drivers and enablers. This wonderful house-looking chart, I know Betty, you preferred the secular one.
Yeah. This is their house. So
Yeah,
it's
but this is our house.
Yeah.
Basically, it's simple to interpret. We have a vision at the top, providing universal access and usage to a broad range of quality and affordable financial services. And we are saying we have identified drivers that will help us achieve our vision. One of the drivers is widespread accessible delivery channels. What are we meaning by this? We're saying we need to have a widespread and also accessible delivery channels. For example, we have agents, branches, ATMs, point of sales machines, mobile phones. How do we get financial transactions to be done? So that's one driver. So if we impact positively on this driver, we expect that to contribute to achieving our vision. Similarly, we have another driver number 2, diverse, innovative, customer-centric products. Here again, we're talking about the players out there providing a diverse and innovative products, digital financial services, savings in credit, payments, insurance, pensions, etc. Basically, you want to give customers various options on how they can access some of these financial services. And the digital space is what we think will be key. We have another driver number 3, finance for SMEs and agriculture sector. Basically here, we are saying we need to focus on this driver to ensure that there's special products specifically targeting agriculture and SMEs. Finally, it's more about consumer protection and capability. Consumer capability is now your ability to see. I heard somebody in this room, I won't say who said they put money in the bank to earn interest on savings. They open up a savings account, put money in there to make money. Now, capability is now your ability to ask yourself, is that the best use of my money? Sometime, I'll give you an example. The IMF came to Zambia one time, and they said, we said, oh, we are booming. The construction sector is booming. And then the guy said, oh no, that cannot be possible. I've looked around, it doesn't look like your infrastructure is anything to talk about. Besides, I looked at the Bank of Zambia credit profile and it shows there's no movement on the credit line, credit issuance to the private sector. But what he didn't know about Zambia is Zambians are smart. The choice between taking money, putting in a bank, versus taking money, buying blocks and building a house or building a chicken run. You find that naturally somebody says, if I put my money in the bank, I'll get some maybe 2% interest. Besides that, I'll be charged some fees. I'm better off buying a block, some cement, doing some blocks. Let me do some chickens, small business. I'll make more. That's financial capability. Your ability to see, is this the best way to use my money? If I put my money in the bank, when interest rates are at 2%, okay? Put 1,000 kwacha in the bank, you earn 2% interest rate. Then you keep your money in there for 1 year. Then you have inflation at, right now it's at 6%. Okay? Your inflation is at 6% right now. There's also a risk of the kwacha being devalued. Already, you find that your 2% versus a 6% inflation, that means your money is actually not growing in the bank. Because by the time you put it out of the bank and you try to go buy something, I think prices have gone up by about 6%. So technically, the consumer capability, what we are saying, this is the key driver, is we want to make sure the products that are being offered by the financial sector, consumers are able to interpret them and make informed decisions. So it's not just protecting the consumer, but also making sure the consumer knows what's out there. For example, capability. Right now we have treasury bills and government bonds where you can earn 23%. Okay? And most people don't know that you can go buy treasury bills as an individual. I think the minimum is 1,000 kwacha. Okay? And you can go buy a 6 months treasury bill, earn 23%, versus putting your money in the bank for 6 months at 2%. But if you don't have the capability to look at all that, you have your money sitting in an account, I'm saving, but it's not the best place to put your money. So it's about being able to evaluate what products are out on the market, being able to say this is the best place to put my money. So in other words, we want you to save, but save where it's the best place to save your money. So that's another driver. So with the drivers, we think if we impact significantly on these 4 drivers, we think we can make a dent or we can move our financial inclusion towards our vision. We have enablers that we think, again, for this to be achieved, we need these things to be in place. One of them is the financial infrastructure. Basically, under financial infrastructure, that's where innovations come in. Innovations. Most people have money, what do you call these, e-wallets. You have Airtel Money, and then you want to send money to your friend is on MTN Money. You want to send money, you want to send from Zona or from Airtel to your friend, but your friend says, no, wait, I don't have Airtel, I have MTN. Okay? That's the infrastructure we're talking about. Like, we want the infrastructure, the financial infrastructure, to develop so that, it can encourage the type of innovation that we want. So that, for example, we have this, what we call interoperability, where we should be able to talk to each other. But for that to happen, we need to work on the financial infrastructure. Similarly, of course, we talked about the legal framework. Without the right legal framework, you can forget it. No one will invest in proper investments if the legal framework is not right. So, again, that's the key. Another one is, of course, public and private sector commitment and coordination. This is just where government comes in, Ministry of Finance and the regulators, just to make sure we provide an enabling environment. Without taking too much more time, I think I'm almost done. I just wanted to share some targets for the financial inclusion, for the financial inclusion strategy. Our target 5 years is supposed to take us to 2022. I believe so, because we launched it in 2017. One of the key targets, like I think the headline target, is for our financial inclusion to move from 59%, which is a benchmark from 2015 FinScope survey, to move it to 80% by 2022. If we can surpass this number, even better. But this is our key headline survey. We hope to do a lot of progress reports in between now and 2022, so that we can identify as and when we fall behind or fall off track, so we can bring us back on track. Another one is, another target is access to high quality financial delivery channels. Again, we need more innovation in that space. We talk about things like digital switch. We want to be able to for example, there's one of the challenges we have in Zambia. If you have a Visa card and you transact, you know what happens to your money? You transact, you go to a ShopRite, you swipe, you do a small transaction of 100 kwacha. Because it's Visa, you find that the delivery channel for that money to go from your account to wherever it needs to go in ShopRite, it may land somewhere in the United States. You go to the US first, then it will be cleared there, and then it will come down. So when we talk about high quality financial delivery channels, we are talking from that angle, and also from the angle of, again, when you want to send money. When you want to send money from here to your parents in the rural area, is it efficient? Is it easy? I think Zona is doing a very good job right now with I see a lot of Zona boxes coming up. I don't know what business model they have, but for me, that's what I'm saying. Each time I see a Zona box and a Airtel money, I'm saying, okay, financial inclusion, we are getting there, but we want it to be high quality. A long time ago, I used to send money using Western Union. Again, it's a product from outside coming in. By the time you're sending money by Western Union, the fees were so high. It's because they had to factor in them coming from outside coming in. With the innovations coming in locally, you can see what's happening to the cost of sending money. Whether it's Zona, the prices are going down. So that's what we want by high quality delivery channels. Innovative and diverse financial products and services. I think I've touched on that as well. We also want by 2022 to have digital financial services. Similarly, it's related. We also want availability of affordable financing. So some of the measures that I'm talking about the credit reporting culture, putting in the legal framework for credit guarantee scheme, again, is to bring down this cost of financing. And of course, least but not least, consumer protection and increasing financial capabilities of our customers. We want to make sure by the time we check on Zambia in 2022, we will have scored on all these items. This one I won't touch, but it was more just to highlight that we actually have a coordinating structure for the National Financial Inclusion Strategy, which is chaired by the Secretary to the Treasury under this steering committee. The steering committee is comprised of the Permanent Secretary, Ministry of Finance, Bank of Zambia Governor. These are permanent secretaries for Ministry of Finance, Economic Management and Finance, Budget and Economic Affairs. That's a permanent secretary from Development Planning. We want commissioner from Securities and Exchange Commission, PIA, CCPC, and someone from Justice. I'm not sure whether that's a PS or not, but that's our steering committee. We have a secretariat that is transitioning to be hosted by Ministry of Finance. But we work with our agent, the Bank of Zambia, so we work together. And then we also have an implementing committee, which through this committee, we are able to do the more regular monitoring of activities. We have several working groups. We have 7 working groups. Each working group is focused on a particular aspect of financial inclusion. And if you were to read the financial inclusion strategy, you find that we have an implementation plan, which itemizes certain things that need to be done. So those items in the action plan have been assigned to one of the working groups. There's a working group on delivery channels and digital payments, so that will focus on those problems. The membership is from the private sector as well as government put together. There's a working group on insurance, a working group on pensions, capital market, the infrastructure, small businesses, including rural agriculture. as well as consumer protection. So these working groups meet on a regular basis, and we've just started, but the intention is to monitor progress on a quarterly basis, and hopefully by the time we get to mid-year somewhere, we'll do a mid-year progress report, which should tell us how far things have gone. Sorry for that very non-interactive session, but government stuff is very boring. Thanks. I'll be guided. Questions now or later?
Yes. Now we're going to have, we don't want to run too much into Betty's time, so I'll only allow for network and, exchange business cards and all of that. So, any immediate questions right now? Or people are still digesting?
Question.
Yeah?
So my question is, what's the government in this plan actively doing to make sure that companies that are trying to provide innovation get funding for their growth? What are they actively doing to make that happen?
Okay, it's a good one. Off the cuff, basically it's about access to financing. And access to financing, I would say it's more focused on our whole small businesses. Let me just put my thoughts together. What exactly is being done? We have the credit guarantee scheme. That one is supposed to lower, if you're able to get a loan, the credit guarantee scheme is supposed to help you. Then we're also supposed to have funds under Development Bank of Zambia, and I don't know which other one, where there'll be funds designed for small businesses. Now, I don't think there's one that is specifically saying for financial inclusion. It's just going to be for small businesses, for SMEs. But there's funds that we put to Development Bank of Zambia, which you'd have to look at the criteria for how you qualify for it. But I think one of the processes that is happening now, just to give you hope, that most of the reasons why you might find there's no money is maybe you hear the story of fiscal, we are having a fiscal challenge. But the idea is always to say we need to avail money for innovation. We need to avail money for innovation. And some of it is putting together funds dedicated to that. But we always have a vehicle, such as the Development Bank of Zambia, through which you have to apply as usual. But it's a point that maybe that needs to be captured and brought out under the working groups.
Yes, you can go ahead.
Can you shed more light on the credit reporting ways and scope of it? And also, how does that differ or compare from the current credit reference bureau?
Yeah, good one. Okay. Yeah, the Credit Reference Bureau, the way we had it, the Credit Reference Bureau is actually a private entity. So it's a credit reporting agency. Before, what was happening was it was established, but it's not backed by concise legal framework. So we have the credit reporting bill, which is right now in the final stage of being enacted by Parliament. It's still at Cabinet, but it's moving to Parliament. That credit reporting bill is providing for the framework under which all credit reporting agencies will be able to operate. Remember, we don't want to stifle private innovation and competition. So the Bureau is just one that has started, but we're saying if any other person wants to start an agency, the framework now, the legal framework is there for them to register. They're regulated by Bank of Zambia. So there are regulations on how you should operate, what kind of, what is allowed, what is not allowed. So the Credit Reporting Bureau is just one of possibly future many agencies that will be on the market.
And is the document currently accessible?
It's a draft bill. I would give you, whatever I give you is outdated, because usually when it's at this stage of finalization, it's marked secret, because we're now doing the final touches, questions of confidentiality, all these consumer protection, abuse, what happens when a bureau, there's a lot of things that are being discussed. So at this stage, usually you can probably get it once it's in Parliament, because then it's being debated, and Parliament always invites the public to submit. But while it's in Cabinet, typically it's under wraps. There was a stage when it was circulated, but I'm just saying that the version that is there now is far different from what it was a year ago. And the one that is available, I cannot give it to you because it's marked subject to clearance. Yeah. But I think it's a good innovation in our system.
All right. Any other questions?
One more?
Yes?
Two more?
One more. Well, 5 minutes is up, unfortunately. So the rest will have to come later. If he will stick around, hopefully he will. If we can't, we'll try and get him via email.
Yeah.
So you can go ahead.
Sorry, I just wanted to find out, as from the government's point of view, what their opinion is on something like cryptocurrency. Because I don't think in the press or got much information about our country, like on their point of view, but like on other countries where we have been able to, those countries have been able to have a stance. So I just want to know, what does the government have a stance on something like this?
Typically, it's a good question, and I think it's a very current issue. I wish I prepared myself better. I was going to come with an exact answer. But such an issue, it is typically something that our agent, the Bank of Zambia, would, for me, I would ask the Bank of Zambia, what is your opinion on this? Then they would give us a position. But all I know is right now, as a government who is here to protect your interests, we don't trust anything that we don't appreciate. So it doesn't come to a framework where us as a government can work with crypto. Until the day Bank of Zambia comes to us and says, oh, we have looked at this, we are comfortable with its operations, we have regulation around it, then we can entertain it. Right now, it's something that we consider in the sphere of speculators, where we don't touch it. But maybe since that was the last question, in closing, I think for me, why I came here, I was asked, by the way, by a colleague who was supposed to come and present. When she asked me to come to present, one of the reasons why I came is I think what it is that is trying to be created here. This space of creating this space where we can communicate and promote innovation. As you can see, we have a policy, we have a strategy. What I can encourage you is look at the policy, look at the strategy, and then depending on what background you're coming from, see how in that space you can fit in. Our job is not to stifle innovation or competition. So if you're an innovator, or if you want to participate, really see how you can play in the space that we've provided. Like I said, I use the joke of casinos. I'm just going to say the space will tell you exactly what we condone and what we don't condone. And so within that space, you are literally most welcome to play. And if, as you are playing in that space, you find that there are certain things that are stifling your ability to work effectively, then it needs to come to our attention of us again as government through your submissions. You say, look, I'm really trying to get this cryptocurrency going, but your law doesn't recognize it. Can you recognize the law? Then we start focusing on it, and if it's the right time, we'll do that.
All right.
Thank you.
Okay. Thank you so much, Mr.
Thanks.
I already had most of you jump up and down, right? So are you all still awake? I know you've been sitting in this warm room for a while. It's this Wednesday afternoon, or evening, you've got all this weekend to relax and have fun. So I'll try to give you as much information as I can so you can actually enjoy it, okay? All right, so you know my name? Do you know what we do? Financial Sector Deepening Zambia is a Zambian nonprofit corporation. Our whole job is expanding financial inclusion. So that's what we do 24/7, 365. We are 26 people. We work throughout these fields on insurance, on banks, on non-banks, on savings groups, just about everything. We spend a lot of time with regulators. We were actually involved in the design of the National Financial Inclusion Strategy. We have members on 6 of the 7 committees, working groups, and I am on the implementation committee. So we are your eyes on the prize inside there. And with regard to innovation, you asked a lot of questions about that. We actually have innovation funds that we use to start some of this work. Okay, so we've worked with innovation funds with insurance companies, innovation funds with banks, where they're developing new products and services that have a better outreach. On the 15th of March, we will actually be introducing a whole product of how to reach clients and how to design from the bottom. Okay, we call it Fin Client-Centric Solutions. And we'll be working with all financial institutions that want to work with us. By the way, we don't pay for this development, they do. And what happens is they're willing, because they know that this is a better way to reach the clients. And you have the opportunity to work with them on these things. So pay attention, okay? All right, so the contents of this presentation, we have about half an hour, but I'm actually going to try to shrink it because we've talked quite a bit, and I want you to get some chance for questions. I'm going to talk about what is financial inclusion for our point of view, how we do it differently, why we do it. Then I'll talk about the region and the country and what's happening in financial inclusion. And then I will also talk about data and how you can use it or not use it. And then we can see how digital finance is working and what your role could be, what the issues are, and how to involve yourself. Okay? So that's what's going on. I covered the first one. Those who weren't here, too bad you missed it. Okay, so now let's talk about how we define financial inclusion. So the FSD definition of financial inclusion is a little bit different because we look at the range of services not just for the poor but for everyone. So generally in the world, if you talk to the World Bank, they say, we're looking to include the poor who are not included. Our answer is we want everyone in the room to understand and use financial services that work for them. So that's really important to us. And as you can see, it's also important for the government. We consider the importance of having better understanding. So for us, financial education, financial literacy is crucial. You need to understand what are your choices, what are your options, what is insurance anyway? I mean, I have to tell you, I work in this field and I find insurance confusing. So if I do, how much more so for everybody else in Zambia? We also say that services have to be available nearby. You heard the Ministry of Finance talking about that we have white spaces where there's no services. So we're really interested in this issue called being an agent. Maybe you're an agent for Zona. What happens if you're an agent for Zona and Airtel Money and MTN Money? So I'm on MTN Money, but I can send you money to a Zona shop. Because in a village, you can't have all 4 of these kiosks. They can't afford it. There's not enough business. So we're moving in that direction already, and there's discussions about it. So we're interested in making sure the services are close enough. And they need to be affordable. We talked about the loans, right? Now, isn't it interesting that in villages, when savings groups are set up, they charge themselves 20% for 3 months. And they say, and you say, why? And they say, because we can actually see that we can pay it and still make money, and because then we make money on our own savings. So if you don't know about savings groups, find out. There's videos on our website. Then that services have to be, the ultimate thing for financial services is you have to trust it. In other words, you have to trust that they're going to tell you the truth about what they're going to offer you. They're going to tell you the truth about how they're going to interact with you. And if there's a problem, you're trusting them to fix it. And they're trusting you to be a responsible client, to understand what you're getting yourself into, and also to make sure that if you have a loan or you have other responsibilities, you deliver on them. Okay, so that's what trust is really about when you talk about financial inclusion. So why is it important? So we've done a lot of studies on this question. And what we know is, for example, IMF yesterday released a study on women and financial inclusion. And it said, in every country, women are behind men by 8 to 12%. And mainly the reasons why are, in families, the man controls the large assets. Culturally, women are hesitant to be involved in formal financial services. It's scary to go into the bank. Also, that women tend not to have larger businesses. They have smaller businesses than men do. So if you go to the rural areas, you find that when you talk about the large cotton crop, the man is managing that, but the woman is managing the vegetables and feeding the family, and usually paying school fees out of it as well. So those types of circumstances exist everywhere from America to Zambia. So we're asking the questions, what can we do about it? But we do know that when we have better financial inclusion, more people are employed, more people are earning money, more people have opportunities to earn income and be employed. We know that the growth is better, both at the local level and also at the national level. And we also know that the growth is more evenly spread. In Zambia, if you read the statistics, you will know that of late, in the last few years, the wealthy are getting more of the income than the poor are. It's a problem. It's also a problem in my own country. And so we know that with financial inclusion, that changes. and more people actually have access to income, and the income is spread more smoothly. And we also know that if you have financial inclusion, you have healthier financial markets. They just do better. Now, the thing is that if you have weak institutions, like when I came back to Zambia after being away for 12 years, I felt like I'd come back into 1977 banking because it was the same. And I didn't understand why, because everywhere else has changed. So the circumstances are changing here. They're just changing more slowly. And when you have weak regulators, when you have weak institutions, financial inclusion is tough. So here in Zambia, people are using informal financial services because they work better. So part of our job and part of the Ministry of Finance's job is to make sure that these banks are under pressure to change the way they do business. And they are. Trust me on that. So there's a lot of research that's being done in the area of financial inclusion. One of the organizations that does this is a group within the World Bank called the Consultative Group to Assist the Poor, or CGAP. And they've looked at a lot of these questions and they've said, we can correlate, we can say, if financial inclusion is better, growth is better. And I want to show you an example of that, a table that shows that. This is a little busy and it's hard to read, but you have access to this whole presentation. You can get copies of it from online or from BongoHive. This is a dimensional path for financial inclusion that the IMF did. And basically what it shows is that if you have better financial inclusion and there's better opportunities to borrow, if there's an increase of 1% on the capacity to borrow, there's an increase of 1.17% in GDP. So that means every 1% you borrow, more than 1% is growing the economy. And that's an overall around the world. It differs from country to country. But in Zambia, the possibilities are quite large. Now, let's talk about the products now, because you guys should be looking at how do we help get these kinds of products out in the market, right? What's the connection to digital? So an example of credit that helps is savings groups, where the members save their money, they have a constitution, they choose themselves, they save certain amounts, and then you can borrow up to 3 times the amount you save. There are 600,000 Zambians who are currently members of savings groups. 80% of them are women, and most of them are in rural areas. Are any of you a member of a savings group? Please raise your hand if you're a member of a savings group. Good. You see this woman. You've asked her at the end. She is doing everything right. In our office, we have a savings group. And members are building their own houses. They're buying the blocks. They're paying their school fees. They're doing all these things, and they're borrowing the money from the group, right? So we're employed. We do this because we believe in walking the talk. Okay. A large majority of Zambians said in the FinScope survey, which is the document and data for everything, and it is available to all of you for free. And the data can be accessed online through Data First, which is part of the University of Cape Town, free data services. For 2009 and 2015, these surveys are free to you, forever. Then what we saw is that Zambians would rather save than borrow. Isn't that interesting? Because all of you in the room are thinking, but where's the money for my startup? How can I borrow it? But in fact, most Zambians would prefer to save first and then start from there. But they need a place to save that is accessible when they have a cash emergency, and that turns out to be much more important than earning interest. So most people will say, okay, but if I can have the money whenever I need it, I don't need interest. And you know how we know that that's true? Because have any of you ever heard of the product called Sunga? You're all nodding your head, right? That's one of the most successful products in digital I've ever seen. And most central banks won't allow it, but this central bank got smart and said, go ahead. Well, you know, they're opening 60,000 Sunga accounts a week. 60,000. Because it's easy to do. You can save up to 10,000. They don't charge you anything unless you take money out. No fees. And it's turning out to be a fantastic product. And the banks are all looking at it and saying, oh, this is bad. What are we going to do to compete with this? Because they have to think about it. They also need savings so that they can lend, right? Okay. So then also, in the question of products, when we talk about products, do any of you know what the Farmer Input Supply Program is? Okay, you know, right? You're nodding your heads. Do you know that over 1 million farmers are now insured under that program? You didn't know. Okay, well, we've been involved in it. We did tests of new products. Insurance companies came and said, we'd like to develop weather-based crop insurance. So in other words, if the weather's bad, you get paid. If the weather's good, you don't get paid. Pretty simple, right? And so what they said is we want to have a product that just insures the period of the crop planting. So that once the crop's growing, we don't worry about it anymore, because then you have disease and other things. But this one, for weather, it works. First year, 200 farmers. There was a drought. They all got paid. Second year, 1,000 farmers. There was a drought again. They all got paid. Third year, the companies are saying, I don't know if we're going to make any money on this, but we'll try it again. 60,000 farmers, no drought. So then we went and took this information to the government and we said, you might want to have a look at this. 3 weeks later, they tendered this for all of the FIS farmers. And over 1 million farmers are now covered. And by the way, you know how we had that period where there was a little bit of a drought? Those farmers are being paid. So then they're able to get seed and replant. So this is an example of something that gets tested by someone, share the information, they realize the value of it, and now 1/3 of Zambians are covered. Pretty exciting, huh? Now, you guys might be the people who say, you know, we know you're going to have problems connecting this to FIS money and the e-vouchers, which have been problematic. We can help you with that. There's software you can develop for this, by the way. Okay? So think about that. And then Western Union, you heard about that with the 15% charge? I heard from Zona's one of Zona's 2 founders 2 days ago in my office. He told me, we're going to take the fees down again. That will be their 3rd time this year. Because the volumes are getting bigger, because the products are getting more profitable for them, and because they're committed to making sure that they don't need that much profit. They can move forward without it. Nice for a Zambian company to be so successful, isn't it? By the way, they're about to move into their 6th country outside Zambia. Yeah, pretty exciting, huh? Yeah, keep an eye on them, I am. All right, so now let's look at what's happening in other countries. Okay, so this is a country comparison. There is something called the FinScope, which many countries do to try to figure out the level of financial inclusion, whether it's formal or informal. And what you can see is here's Zambia, right here. The blue is formal, the green is informal only, and the red is financially excluded. Not so good, huh? By comparison. And the people at the top, you're going to find Rwanda up here is showing here, but it's actually relatively low, and their new study shows 89% of blue and green. We also in Zambia have quite a bit of informal, and that's growing faster. That's the first point of entry. So what's happening is that all of us are saying we need to increase the number of people who are actually understanding and use financial services. And so what that means is education, improving the products, and making sure that they're paying attention particularly to people who are not well served, which includes most of the people in this room. I'm excluding this pair right here because they're obviously well served. Okay? So this is what's happening. Different countries, different circumstances. FSDs exist in almost all of these countries, or working in almost all of these countries to try to help financial inclusion expand. That we have 10 organizations, of which 2 are regional and 8 are individual to countries. And almost all of us are like us. We have a Zambian board made up of people like Caleb Fandanga and Monica Masonda and Honorable Judge Piri. These are the people on our board. They care a lot about this stuff, and they make sure we're on track. Okay, so I didn't bring our infographic page, so I will send over some copies. But essentially what it says is we have 59% financial inclusion. The numbers that I gave you earlier, 2.5% of the population has insurance, understands what insurance is. But actually 6% of the population has insurance. So some people don't even know they have insurance, and they have it. That we have large numbers of MSMEs that don't know how to access funds, or are not accessing funds, or maybe need saving services more than they need loan services, or maybe they need insurance services. How many people had insurance in the downtown market when it burned down? Yeah, virtually none. And now we're saying you should be requiring insurance for these people. and having them declare what they have in their shop. And that way, when there is a fire, and there's often, you will have some sort of accident. Somebody will break in and steal your things. Something will happen. If you have insurance, you worry a little less, and it doesn't wipe out your family. And these things are important, eh? So the infographic, by the way, is also on our website, which has a lot of information, and you're welcome to look at it at any time and take away whatever you need. This is Zambia. Do you recognize it? It's the butterfly, right? Okay, so now there's a difference between the orange ones and the green ones. Can you guess what this might be from? You heard that we did a geospatial map last time? Okay, so this is 2015 data, and this is the geospatial map of financial availability of services in Zambia. And what you see here, is there a little thing? Is there a red thing here somewhere? He got it, but I didn't get it. In any case, I'll just point with my finger. See this orange? No financial services whatsoever. No bank, no microfinance institution, no savings groups, no credit union, no credit cooperative, nothing. We couldn't even barely find kalobas in those areas. Okay, and we looked. The green areas, you see the line of rail? Look at that right there. See? That's where the services are. But there are a lot of people who live very far away from those areas. Less than half of the areas in Zambia, the wards in Zambia, have financial services of any kind. So do you wonder when people are chasing you here and saying, can I please have some money? They don't have access. It's a big problem. So our commitment and the commitment of the government is to say, we need to fill those in green. In the next 5 years, you should be able to have access wherever you are. Now, some of these areas, like here, that's a national park. Probably we're not going to see too much in that area because the zebras haven't checked in with us yet on whether they need savings products. But where people are is where we care about making sure that the services exist. I have a lot of ground to cover. I'm trying to do it fast. We try to do everything in colors too. This is the financial lives of the poor. In 2015, we did a lot of research. We did the FinScope and asked over 8,000 people about their financial lives. We then went into detail with over 350 families across the country. Every week, we checked in with them on how they spent their money, how they saved their money, how they traded for goods and services. So there's a lot of barter trade that happens in rural areas, in particular when the hungry time occurs, when they don't have regular cash. So as you can see, when you have high-income families and high variation, what they use their money for is very different from a low-income family, which is using 60% of its money for food. Whereas a high-income family is only using half of that for food. So this is how people spend their money very differently. That also affects what kinds of financial services they need. For this family, savings is everything, and emergency money. For this family, they need to be able to invest too. So for them, the government bonds is a good deal. And they'll have enough to put money into it and not have to run around and try to find the 1,000 kwacha again when they have an emergency. So do you see how this is very different? That means also that when you are designing software, you have to think, what group are we designing for? So when you're thinking about, okay, I'm going to do a program that helps people choose the best loan for them. Okay, best loan for this one is going to be different than the best loan for that one. Do you see? By the way, this data also available to you for free on the Data First website. Okay? So you can look at this data too and see what did the families say every week they were spending their money on and the problems that they had. So they were being interviewed. This is called a financial diary, and we are very fortunate that we have this kind of data because it's expensive to collect. Okay. Now, what are the challenges for financial services? So, does anyone in the room know what's the median age of Zambians? That means if you counted halfway, how old would that person be? You raise your hand.
16 is the median age for Zambia.
It's actually 15 and a half.
Wow.
And do you know what percentage of the population is under 35?
74%?
Mm-hmm. Imagine 70% of the population is under the age of 35. This is one of the youngest populations in the world. So if you have a very young population, you have to educate them. You have to make sure that they understand about savings at an early age. The earlier people save, the better they manage their money throughout their lives. So if you're saving your 10 ngwe or your 15 ngwe when you're at school and you're 6, that's the person who's going to make the middle class first, even if they're uneducated. They learn about that part first. So what did FSDZ do and the government? We said, you need to change the curriculum, the national curriculum. So for the last 6 months now, we've been working with the government on changing the national curriculum to incorporate financial education to every grade. And the first draft is now ready. So that means your youngsters, your friends who are still in school, they will be studying how to handle their money. And they will also be learning a little bit more about how to complain when there's a problem. In Zambia, can anyone guess how many complaints were registered last year for financial issues, financial problems? Can you guess? In your population of 8 million, 7 million adults, then how many? Can you guess?
1,000.
Sorry, 1,000. Okay. Anyone else? 87. And what does that tell you? It tells you have a system that does not work, and people don't complain. Zambians, you're also polite. This is a lovely culture for a foreigner to live in, because you're also polite and you don't complain. You should complain. In the United States, the ratio is more like 1 to 200 adults will make a financial complaint in a year. So this needs to be fixed. We need to help people understand. We need to make sure that everyone is well educated, including those children who are out of school, many of whom are girls. They need exposure to these ideas and how to manage their money. What the Deputy Governor Administration says in every speech she gives, she says, well, how we should be thinking about this is income minus savings equals expenditure. Whereas most places in Zambia, and also certainly in other countries in the world, it's income minus expenditures equals savings, and there's nothing left. One of the things that's very interesting about Zambian rural people who are very poor is that we tell them, they say, we're too poor, we can't save. They start a savings group, and suddenly a woman comes back after the second cycle and says, I have 5,000 kwacha. It's on the videos, you can see them, 2-minute video clips. So yeah, what's happening is people are learning this. Once they learn it and they start doing it, they acquire confidence, they start doing things, they start making money, and they start having savings, right? So then we have a thinly dispersed population. This, you cannot underestimate how challenging this becomes to Zambia. Because you have a population along that line of rail, which is about 100 to the square kilometer. And then you have people in rural areas where there's 8 persons per square kilometer. This is like Mongolia. Nothing for hours and hours and hours of driving. And so those people need access to a financial service. Who's going to build a bank branch there? It's $300,000 equivalent to build a bank branch, a basic one. Who's going to build one there? No one. But we have an opportunity in digital finance. Because then that same one shop that's in that village could also be the mobile money agent. So we're thinking about how do we deal with the thinly dispersed population? How do we get services to them? That's why the expansion of digital phone towers and why the expansion of agents can turn things around for the Zambians who are in the rural areas. Structure of financial markets, not yet advanced. Okay, so remember what I said to you about the banks are still in 1977? They still are. So many of the banks don't have digital services. You can't call them and say, can I take some money out of my account and have it sent out on Zona? They don't have the skills to do this. They don't understand how. The good news is that the mobile money companies are starting to pick up the slack. So you have Sunga now, and you have Airtel money that's lending, and you have MTN money that's lending, and you have some further discussion. Airtel tried insurance. It didn't work very well. They may yet try again. So what's happening is there will be a changeover. The banks that can't move on this will be forced to close. They won't make money anymore. I mean, look at how you see transfers are taking place with Pick and Pay. Pick and Pay is not a bank, but it's moving money across the country for you, and you can use this service. So think about that. These are the challenges of financial service delivery in Zambia, and what can you do to make money on it and still provide a service? Because in the rural areas, people don't expect you not to make profit. They're paying themselves 20% every 3 months. So they're making their own profit in the same way. So you should be thinking, it's not bad to run a business and make profit out of it. What's worth it is when you can do that and also make a difference in the population and the people you serve. Okay? All right. Sorry, I'm almost done. I'm moving fast. Okay. We did a study using our data. These are some interesting things we found out about your and your age group. Your group has higher financial inclusion, and if you're male, even more so, and if you're urban, even more so. And if you're well-educated, meaning past grade 10, even more so. So you're the ones who are at the top of the game. Most of you are already in debt. So you borrowed money to get educated, to buy that computer, to move skill set forward, maybe to buy a vehicle, something like that. All of you are far more in debt than most of the rest of the population in terms of your income. That's a problem. Stop borrowing. This is really important. You have to be thinking about this. In addition, your grandparents have forgotten all financial skills and are expecting you to support them. This is a problem. It has to do with HIV. It has to do with the nature of Zambian society and expectations culturally. But it does mean that the people who are age 66 and above, and largely those are women, are expecting to be dependent on their relatives. Something like plus 50%. So you should be encouraging your parents right now to invest and save enough money so you don't have to support them. Be aware. This is a problem in Zambia. We're also looking at why is it that women are actively excluded. You've heard some of it, but much of the challenges for women is that they just don't think they have enough capability or ability to do this. You're nodding your head. You're the exception. Talk to your friends. So we need to really help women acquire confidence in this area, and savings groups are helping. We're actually watching how they change the confidence level of women and change their capacity to do certain kinds of things. Now, I want to say something about the informal. I haven't talked about formal and informal, but informal grows faster in Zambia, much faster. And it's really the entry point for most people. So you borrow from your friends, you join a savings group, you join a chalimba. These kinds of things is how you get started. And when you have enough money, you start thinking about going to a bank. So that's the pattern we know about. And we're watching it very closely because the central bank doesn't want to supervise these informal institutions. It'll destroy it if they do. But at the same time, it's hard to encourage them when there may be a problem later. So far, so good. We haven't seen a lot of problems. There hasn't been a lot of corruption. People repay their loans like that. It's because you choose. I mean, I chose these 20 people. I know who they are. I know who their families are. Like that. Okay, now we're going to move to the role of data. This is the thing you should be interested in. Please sit up. If you were sleeping before, you can listen now. So in terms of data, the world is computerized. There's all sorts of information available on you. By the way, if you ever thought you have privacy or secrecy, it's pretty well over. Facebook has pretty much ruined you. So is there anybody here who is not on Facebook or any social media? Anyone? You're not on Facebook, but you are on social media because it's part of your job. Is there anyone here who's not on social media? Raise your hand. Okay, so your privacy is over. Everyone, there are people mining your data now as you sit here and saying, okay, so this person, he's this age, he has this many friends, he spends his time at this and this and this location, he reads these materials, he seemed to be interested in that advertisement. You know what? They know a lot about you. And so they are starting to mine that data to understand what kind of consumer you are, what kinds of products and services you might consume, and also politically, How are you going to vote? So be aware that this is happening. You can either be part of the solution or you can be part of the problem and just ignore it. Now, so there's supply of data, there's demand for data. And most of you in the room are doing both. So, for example, you heard it, we were talking about this new legislation for credit rating. Okay, so your house electricity bill has just become open for people to see when you pay. Your cell phone payments, if you have a landline at home, that too. Your rent will go onto this. If you're paying your rent on time, yeah. If you have something that's a lay-by, yep, they're going to pick that up too. So suddenly, your financial matters are going to become open. And what that means is that if you don't follow the usual pattern of paying on time, that also comes out. So if you've been juggling and saying, okay, I'll pay this one later so I can pay this one now, like my children do at home, and I say, if you do this, you will never be able to buy a home. You will never be able to find a business loan because all this stuff is on record. So be aware that this is happening and that the data is out there. You tweet, it's known. You send a message on Facebook, it's known. You text something, your phone company knows what you're texting. And they also can track where you're going and how long you're spending there. So this data is all open. So the thing is, in terms of data, that you have to look at this as a data analyst on that side and say, how can I ethically access and use this information to make sense for the customer and also to make sense for the businesses that I think can move forward.